Yo, what is going on, everybody? This is going to be my first breakdown video on US30, talking about today's buy trade that I took. And so pretty much I'm going to try to simplify this as much as I can. Um, Not talking about too much of my mentor's way of trading because I don't want to give out free nuggets. But let me just talk a little bit about the way that I use support and resistance. So to start off, as you can see right here on the right, you see my support and resistance playing out on these quarter points. So pretty much quarter points is every 25, 50, 75, 00s, and on and on. So it's pretty much like counting a quarter, you go by every 25. That's the way that I make this much more simpler for me. And as you can see, every 500 points, I have a very thin line here, which is for me the way that I see a trade to either be indecisive or continue on to create the full 1,000 pip move, just like this here. You see this bullish engulfing candle, and it goes all the way completely to 1,000 pips. So with last week's or yeah, 1, 2, 3, yeah, pretty much 2 to 3 weeks ago, we were looking at shorts here. But this head and shoulders was created on a daily, right? So pretty much my supply and demand run since May of this year, and it's played out perfectly with current price. So now after this head and shoulders happened, I knew that price was going to go shorts from here and complete the 1,000 pip move, right? So when price creates a lower high, it needs to find where that next lower low will be. And this is the area where that new lower low was created. Every time you see a lower low, you got to look for the next lower high. So that brings me to H4. H4 price broke above this support line here. Well, it was a resistance line during this price here, but it became support with these three candles here on the H4. So now let me break it down to you guys how I viewed this reversal part of the trend. And the way that I like to spot reversals is by spotting out divergence first with the RSI. So you could see with this divergence in this time, price was under this 30 level here. So once it's under the 30, that means it's oversold. Once it's above 70, that means it's overbought. So you can clearly see the example of it being overbought here at CPI news. And it went straight to sells until it hit these 2 points here, which is strongly oversold. That's why the lower low was created to look for that new lower high. Which brings me to my hour one um, analysis here that I will be talking to you guys about. So, after this double bottom was created, you can see that either this 33,000 line is the neck or resistance, newfound support here, or you could go into a minute 5 and spot out that resistance, newfound support. So it resisted this price here, resisted, it broke, tested this 32,000, broke above again from this trend line here, broke above, and then tested this at 33.58 or 33.60. And now that brings me to finding a buy setup after it broke above this resistance, newfound support. So now that this is support, you obviously have to find buys in a support area. So the way that my trade ended up going, I entered at 4 a.m. before the session started. So my entry was pretty much, let me, yeah, pretty much right here, almost at 5 a.m. because my entry was exactly at, let me see this real quick, 33,137. So 33, 137. Where does it land? It lands right here. Okay, 4:55, right before 5 a.m. New York session. So as I was seeing this support being respected here, I was okay. I was gonna look for a minute five um higher higher price than this. And then it pulled back, reassuring me that this is probably the lowest point that it would be heading to um for it to be a valid, break of structure from this data here, and now this data here. So an even more A1 entry could have been having a set buy limit right there and then taking that trade up to the next quarter point here at 33,500, or where price hit right here, showing resistance with these wicks. 1, 2, 3, and then 4. And now price is trying to hit that 33,500, indicating that the next lower high to form. So let me just, yeah, there we go. This is how my trading day or morning pretty much went. So price moved at 7 a.m. as you could see on a H1. Let me take these sessions out. And you can see in previous data that price was making lower lows and lower highs. So it hit a lower low at this 33,000 support and then created a lower high at 32,264, which if you do it as a quarter point, you can adjust this and put it directly to 25.0. And you see that 250 acts as a resistance area. So resistance is a lower high, and then it broke all the way to make this low on Friday 16, right before market closed. And you could pretty much trade like that every 250 points or every 500 points. So it just depends how you want your trading to be done, your risk, and your profit percentage or profit gain to be executed and accomplished. So I trade pretty much every 500 pips to 500 or the full 1000 to the next 1000. So you could see this formation is a double bottom on a H4. And H4 is where I spotted this divergence here in the market. So divergence is pretty much the flip of direction. Excuse me. It's a flip of direction of the market trend. So it was pretty much exhausted here at this level 30. Once it started going under this level 30, it was trying to find bullish power back to create a new lower high based off of this support being broken here. So now that price is back up to the support broken, you found resistance. I'm going to probably look for another short trade here and keep it to a 100 pip stop loss for another 500 pip gain. So it could either happen here, that's why I have an alarm here, or it could go completely all the way up to the 1000 pips. Keep that stop loss above your supply zone, which is fairly good space on this 100 pip setup. And then if you take this short from the supply zone, you see that you get a complete 1000 pip drop. So entering on today's session, you could see here the blue lines is where 5 a.m. starts New York session. New York session pretty much started at this bullish engulfing candle. So I entered around nearly 5 a.m. I just entered a little bit early. And this is my exact stop loss to profit. So I did a 2 risk to reward, which is pretty good. You always have to minimum do a 1 to 2 risk to reward just so your profit can be uh, like a valid percent gain for your account. Doesn't matter how big your account is, as long as you start with a 2 risk to reward, you're always going to be making money in the market. So it had lower highs here. And the reason why I was looking at buys is because it made this new higher high in a 1 hour and it broke above these close candles and these wicks. So these wicks are minute 5 candles and these closed candles on the hour one. So you could see pretty much the difference here. And so with this 17-hour GMT time bullish engulfing, it it told me that the market was going to buy, and then it pulled back to make this higher low at 33,000 support to look for a new high, which was created at 1 a.m. And once this bullish engulfing candlestick opened and closed at 1 a.m., then that's when I knew that this support was a valid minor support to look for a long position. So 1 a.m. happened, 2 a.m., 3 a.m., monitoring it until that New York session came up. As you could see, you see the lower high, lower low. This is another low, lower high, pretty much. This is a new lower low. And then this became a high point, and this became a higher low point. And now this is a new higher high point. But in a bigger sense, on a H4 and daily, this is going to be a lower high setup to go short again into the 2023 year. So it could even happen something like this. See, it's already a 2 risk to reward, but it can hit 32,000 instead for a 1 to 3 risk to reward. So you're going to risk 480 pips to gain 1,483, or have this set up here if you want to do your stop loss to 500 points and all the way down here, because you see this is support in October 22nd of this year. So you're looking at a almost nearly 2,000 pip profit trade, risking only 500 pips. So that's an example of how I trade quarter point theory. And this is exactly how I took my trade coming up on this long for New York session. So I didn't want to make it complicated for myself, just looking for lower time frame, higher highs, and new higher lows to indicate if the market was going to buy for the as a retracement to the broken support area, which it did. And the whole entire 7 a.m. candle was the full bullish push. So I pretty much made like 1,200 in this trade. I would have only risked 500 points or $500, which is a really good risk to reward. So $1,200 for a $500 risk. And yep, that's how today's session played out. And now we're gonna wait for tomorrow, or I know next week, after the holidays. A lot of big traders are gonna come back into January. So maybe possibly in January, we're gonna look for that even long-term sell from here all the way possibly super lower price, probably 3,500 pips here, or another pullback up to this or this. But looking at the economy right now, we're looking for shorts mainly until price breaks above this high here. Then we can focus on going longs up to this price or here, but not until price reaches back up to 34,500. So, yep, that's my simple and effective kind of pullback strategy. I'm not going to go into fibs because that's going to go with my mentor's way of trading, and I don't really want to put that out there for free. So, yeah, this is just based off of price action, lower lows, lower highs, and stuff like that. So, hopefully, you guys learned a thing or two. Um, Always focus on the bigger time frame majority of the time, and lower time frame executions for the trade. but I do my executions every hour candlestick. So hopefully you guys understood everything. I try to make this quick and effective, and I'll see you guys on my next trade. Thank you.